Earlier in this week, I saw this tagline. It said, "This market is not for beginners," and I mentioned that. And so I've had this idea this week about the weekly forming this wick, right? It would look something a little bit like this here, okay? And that idea was based on the FANG stocks all reporting, Apple, Amazon, and Meta primarily, and that these earnings would be poor was my idea, right? And so if you're a beginner, there's no better time to learn. People say that, but genuinely, that there's no better time to learn because this is history being made, and these are things that will not repeat themselves. They're anomalies, right? And it's good to learn what can happen. And so this is the S&P, and basically the move today. You see this move? You see how yesterday we were yesterday we had wicked below this line on the futures, but then today we have this move up, okay? So I'm going to show you Amazon and Meta. So back in the day, if I said, okay, well, they'll have bad earnings, that would maybe be like a 10% sell-off, maybe a 6% on something like Amazon. Even when I was saying it this week, my expectation would be maybe come down to this support, okay? That's more logical. That would make some sense to come down to this support, bad earnings, and then kind of figure it out from there, right? What happened on Amazon's earnings is they dropped 20%. Okay, that is a large part of the total market cap of the SPY. So the SPY sold off, or should have, by basic ideas, just common sense, should have sold off with this. I'm going to show you Meta. This is Facebook. This week, Facebook after earnings sold off 30.67%. So Amazon down 20%, Meta down 30%. Okay? So my idea was correct, and it even exceeded my expectation. Like I said, I thought, maybe it would come to support and hold support. You would naturally think, that the market would sell off when Amazon and Meta report, and when Meta comes down 30% and Amazon 20%. Today, the S&P up 2.38%. Okay? I'm going to show you some other things, and these are the things to really pay attention to. But I'm explaining that because you never know what's going to happen. But a lot of times when you're trading, you have to use like a forecast, just like the weather, right? And this is an anomaly. This is like saying you walked through the rain and somehow you didn't get wet. That's how odd this is. No one could have expected it, right? So I want to show you, because it's also how to spot a short squeeze, which I indicated earlier in the week. But some other things did not agree with what is a short squeeze, right? This is a short squeeze. And I've covered what that is before. So look at across the boards. Let's look at for something simple like TLT I've been talking about. Okay, so TLT has broke down all the way to this week. It came into these levels not seen since July of 2014. It has bounced off that level, but did not close above this green line. It actually closed beneath that. Okay? TLT is bonds, and so what the bonds are telling us, what we have is a divergence. Okay? These things do not, TLT bonds are not supposed to always move with the market. It's not a one-to-one. but it needs to be roughly correlated, right? What you should be seeing on a day, if there is going to be a rally, like a real move to the upside, would be it should have started earlier in the week with the bonds, and then you should see some kind of real momentum. But at the end of the close of the week, bonds closed down from back in the day. If TLT broke 104, we knew there was a problem. This is a shit hit the fan moment when it breaks 104. If it broke this, it's around 98, this line here, or yeah, this line here. If it breaks that 98, we're really in a shit hit. That's unthinkable. That's what I'm trying to say. It's like, as a trader in 2019, watching all this stuff, these things are unthinkable. Okay, and so this bond market is getting destroyed. Now look here, gold down 1%, silver down 1%. Your natural gas is getting hit. Gas down. All of these things here coming down are indicating demand destruction, right? That's a whole nother topic for another time. Look at Tesla. Tesla has sold off, and they have this stuff going on with Elon and Twitter. But Tesla, on a day like today, in a normal circumstance, this should have ripped. That's why I keep it on here, because this is kind of like an indicator of what people are doing in growth stocks, right? So what we see today is one powerful squeeze, okay? And so that's why neutral is a position, right? Which leads me to the next thing. On Wednesday, you have Fed Powell coming out. And so when people as traders, they say, I'm in cash. Like right now, personally, I'm in cash. I have some small trades, a couple $1,000s here and there. But if it all got wiped out, it wouldn't matter, right? So when you're all in cash, and I'm so small compared to the billions of dollars that are out there. Imagine that cash is like fuel, right? And coming into Wednesday, with the market acting this way, this is like not what Fed Powell wants to see. He needs this to come down. And we're coming into Wednesday, and there's all this fuel, all this pent up money that needs a place to go, right? Everybody's sitting on the sidelines. Good investors are out there, they're ready to go, but they're sitting on the sidelines. So if Fed Powell comes out on Wednesday and he says something that is dovish, if he says he's going to cut in December, something along these lines, and the market takes this as dovish, that's like throwing fuel onto this fire. Now, it's always a risk and a gamble, but I don't think that's Fed Powell's idea. I think he wants to see this continue to the downside. So my guess would be that he comes out and remains hawkish because he needs this bar to get wiped out. He doesn't want to see, if he throws fuel on the fire and says something about easing or something along these lines. This is proof that there's so much fuel, it's like jet fuel in this market. And that's why it's important to learn this. This is like, it will benefit you later, right? So my guess, right, just assume my position on this is that Powell has to say something and maintain this hawkish stance, because if he comes out and it's kind of even soft at all, this is going to do this. And it'll probably, let's see what line. No, that's an exaggeration. Let's go. It could do that, but that would take longer. We'll come into this line here. We'll probably come into this area. You see this yellow EMA, right? The 100. So you would see which would make sense with this trend line. So it is possible that Fed Powell, if he is dovish, is what they say, that you move up into this 405 territory, right? And that is with Meta and Amazon completely getting destroyed. Okay? Now let's look at Apple so you can learn something, right? So Apple comes out, their news is neutral. Shitty on the iPad sales, not great with iPhones, but some of their other stuff did good and they're kind of neutral. So remember this stuff. Remember this for next time, right? This is why I'm taking the time to explain it. So what happens is Apple, Amazon, Meta, these big companies report. So just think about money has to find a place. It's like water. It's got to find a direction. So these get totally destroyed, but all that money is still in this market. It's still in this world. It hasn't left completely. And so what happened very quickly was people rotated out of this, and because Amazon wasn't going to shit the bed, right? Or I'm sorry, Apple wasn't so dismal like Meta and Facebook. What they did is they go, okay, well, this is at least a place to stash some money for the short term because we're sure that it's not going to head down here. That's why you see this volume on Apple, right? So something to remember is during these earnings reports, what can happen is a rotation, and they kind of put it into safety. So another example is Netflix would be an example of this, because Netflix had a pretty good earnings, right? And so because the rest of the market was unsafe, you'll see if we look at Netflix, you'll see that this is like a couple weeks ago. So you see this big gap up, you see this big move out of Netflix. This is that same idea playing out. Okay, plus they cut some deal with ad revenue, so that's probably where you see this gap up. But they were down here. People, the Grim Reaper was on Netflix, and they came out with an okay level of earnings, plus this little bit of news about ads, and boom, right? And now they're kind of in no man's land. But so that's an idea, something to think about and to watch in the future, okay, is that during these earnings that can happen. They will rotate into these other companies. So you also see when you're trying to track and determine a market direction, you look at the macros. You're looking at the 10-year treasury here. And you can see that I started talking about it at 350. Even back then, my idea was if it hits 350, that's Grim Reaper territory. If you have to understand that a little bit more than maybe some of you do, but like for this to hit 350 is extraordinary. That's why I say it's like historic, right? And so now the 10-year treasury is hanging out around 4. It topped out at 433, and it's up today. So these, okay, so here's this, the SPY. So remember this. The SPY and the 10-year treasury should be inverse. When this pulls back, right? So if the SPY, if this is green today by 2%, by 1.8, the SPY should not be green by 2.38, right? These are counterintuitive ideas, okay? And as you can see, the 2-year 3.36, these are all green, so these should have been red. So how do you spot what will be like a squeeze versus like a long-term reversal? For this to be a long-term reversal where you want to feel bullish about it, this needs to come down. These need to make sense, right? At the end of the day, there are certain things that do need to correlate. When we talk about bonds, the bonds and these things here do need to correlate with the market. Okay, so that's really important to understand. Now the VIX did come down a lot, okay, which is good for volatility. Now when you look at the VIX, what you have to understand is that what is happening here is if you look at this, let's look at this chart here, and you see how 1 hour green, 2 hour green, 3 hour green, 4 hour green, 5 hour green, 6 hour green, 7 hour green. We only had one. You see how it's all green? Okay? That's what the VIX is showing you. You see? 1, 2, 3, because you're only moving in one direction. Do you see what I mean? Okay? It's coming down like this because you're only, so what does that mean? Because volatility, this wasn't a volatile day, it was just an up day. Okay, so the volatility wasn't there, so the VIX comes down. As opposed to if we go back to like a day like this, you see how wild this is? Let's put it on the daily. Right, and so when the VIX is doing something like this, and if we were to go to that day, October 6th, okay, so you see how we have this, you see this gap, that's volatility, right? And then we have this big nasty shit here. So the idea is on this one in particular, it's this gap that created that VIX, that big move in the VIX. Here's some other things to pay attention to and why. So how do you spot a short squeeze versus a long-term reversal? Okay, so how does this happen, guys? How does the dollar move upwards and the SPY, this is a thing to remember as well. Look, the SPY is up, and everybody knows from Bitcoin world, dollar up, Bitcoin down. But today we have, it's Bermuda Triangle, dollar up, SPY up. Not only that, all these currencies up, SPY up. These need to work inversely. These are macro, right? So what we have is a very weird anomaly. That's why I'm taking the time to show you. It's, these things only come up so often, right? And it doesn't seem important, but a day in a week like this is a lot. You can learn a lot, right? You have a big anomaly. You have these companies getting crushed by 20% on Amazon. At the close on Friday, you have all of your commodities completely getting whacked. That's not good. At the same time, you have the 10-year Treasury up by 2%. You have the dollar trending upward. And you also have the SPY up 2.38%. I hope this makes sense to you. I hope you understand that what this is telling us is that people would call it market manipulation, but the market is driven by derivatives. And a day like today, and what has caused, the odd thing is, what gives the market the most exposure to a crash is right now the only thing holding it up at the same time. So derivatives, leverage is preventing this. That's what we see. Because with Amazon selling off and Meta selling off, if these contracts, these options contracts, if these derivative contracts have to be filled, it costs them more than to buy this and to create this pump, right? So that's what you're seeing. So that is saving. And if you look at the options contracts and how many are out here through this whole period, guys, like, yeah, I mean, definitely starting back, but probably even back here, but really since September through this area, but really this whole year, but really, really heavily from here to here, what you have are so many put options, which means that people think it's going to crash, that it pays the casino. It's like a comp or something you could think of. I mean, that's a bad analogy, but it pays them better to buy what they know is a shit show than to pay out on the contract that they would have to pay out on, right? So the derivatives are actually saving the market from the sell-off. If you're looking at this going like, how is this possible? That's your answer. because if there wasn't so many buyers of these put options right now, this would have already been, we would have already broken this level, okay? Because the natural order of things, the basic bookkeeping and balance tells you 20% down, 25% down, that's a big deal. So you can be totally right about an idea and then be totally wrong, right? And that's the market. That's what's going on right now. And so I like what I'm seeing in a way because it teaches me a lot. But also, I do believe that on Wednesday, I don't think Powell likes this. I don't think the Fed likes this. I think the Fed's going to come out maybe even heavier handed because they cannot put fuel on this fire. Again, I could be wrong. And the other thing I heard a guy say, which was pretty funny, is that this game that's being played right now, you would think like a basketball game, your team's down by 30 points. And what this is like your team's down by 30 points. You hit one 3-pointer and they go, oh, we won the game. We won the game. Don't worry. We're the best team ever. We won the game. Forget about everything that makes any sense. They just say we won the game, which is a lot of what we see in politics nowadays anyway. So anyway, that's what's going on. And so I hope you're learning, and I hope all this stuff is helpful. All right, peace.